Welcome back. You're watching The Money Show with me, Kavita Thapliyal. Now, there are plethora of funds available in the market to invest your hard-earned money, but how do you assess which is the right fund for your portfolio? What are the criteria that one should look at to help navigate through this maze? Now, we have on board Amol Joshi, founder, Plan Rupee Investment Services. Also, do not forget to send us your portfolio queries on our WhatsApp number, which is 865-797-4571. You can also email us your queries on themoneyshow@etnow.tv. Hi, Amol. Good evening. And we have our first viewer online. Nitin Pagare wants to ask you his question. Hi, Nitin. How are you doing?
I'm fine.
You're calling from where?
I'm from Mumbai now, right now.
Okay. So, Nitin, do you already have a financial portfolio and you want to know about adding a small cap fund, or you are just beginning your process of investment?
I already have a portfolio.
Okay.
I'm investing in 2 large cap funds, 1 small cap fund, and 1 value fund. That is UNESCO Contra Fund.
So you have 2 large cap, you already have 1 small cap, and you have 1 value also. So you already have a small cap, right? You want 1 more small cap?
Yeah. I'm investing in SBI small cap just now, and I want to add a small cap fund.
But you already have a fantastic small cap fund in your portfolio. And apart from that, you have 2 large cap and you have 1 value. I think a good diversification is strongly recommended. But then, are you open to opting for some other category, or you really want to stick to a small cap?
I'm open to other category also, but I think the small cap gives. I'm interested in investing for 5 years, more than 5 years. So I'm thinking of it.
Perfect. That's a good clarity we got. So Amol, over to you. So he said he has 2 large cap, he has 1 small cap and 1 value fund. What about suggesting him some other category fund, or you think that sticking to a small cap is good for him?
All right. So good evening, Kavita. First and foremost, Mr. Nitin, when you already have 2 large cap funds with 1 small cap fund and 1 value fund, I would suggest that small cap allocation probably is close to 25%. Even if in a simple manner, if I take an equal allocation across all these 4 schemes. So I would say 25% allocation to small cap is a good starting point. And especially given that your horizon is around 5 years or 5 years and slightly more, if you had horizon of 7 to 10 years, preferably 10 years more, there was still some sense adding 1 more small cap fund. But I would say that if your horizon is about 5 years, then 1 small cap with 25% exposure is a good enough exposure, is a good enough allocation. Coming to what Kavita suggested, you could be open to looking at other categories. I would suggest if you are looking at adding something towards the mid cap, you have 2 choices from my side. You can look at HDFC large and mid cap fund, where you will get some exposure to mid cap. Or if you want to look at purely mid cap, then Motilal Oswal mid cap fund is also another scheme that you can look at to supplement your existing 4 schemes. At the same time, Kavita also mentioned about the diversification. Unless your portfolio is really large, I would suggest these 4 schemes, or at max 5 schemes, would do a really good job of constructing a portfolio for you. Especially if you look at the annual rebalancing or annual portfolio evaluation, it is not necessary to go overboard in terms of adding number of schemes to the portfolio.
Fantastic. Nitin, are you there on the phone line with me? Did you hear? Yeah. Tell me.
Yeah, I'm there.
Anything else you want to ask?
I wanted to know which of this Quant or Axis, which is a good small cap fund.
Right, Nitin. So that was your main question, which is a good small cap fund. You have picked up, you have selected shortlisted 3 schemes: Quant, SBI, or Axis. Quant has delivered a very robust performance over last several years across all time frames. Similarly, Axis has also done well. Within your given choice, I would suggest Axis small cap is probably better bet in all the 3 funds that you have shared with us.
So much, Nitin, for sending us your query. But then, Amol, this is a time where a lot of investors are gaining interest towards mid-cap and small-cap category. Sure. How should they analyze the best mid-cap and a small-cap fund for their portfolio, just in case they don't have it? And if in case they already have one, they should maybe look at increasing their exposure or their investment amount, or if the fund is not performing, they might want to just exit also. What should be the call?
Right. So in the previous answer, we also mentioned about the annual rebalancing as well as annual evaluation of the portfolio. Weekly or monthly is not a very good time frame. You should look at your schemes, how they perform, especially on two parameters. First parameter is how the scheme is doing compared to its benchmark. Every scheme has a benchmark. And second parameter is how the scheme is doing, particularly with the category compared to the category average. Based on these two parameters, now many times schemes also go overweight or underweight on a particular sector. And if that sector does opposite of what the fund manager is thinking, then you will also get a performance setback. So you will have to evaluate multiple parameters, but starting with comparison with benchmark and starting with comparison as a second point, comparison with category average are the good screening criteria for your annual rebalancing and for your annual review.
All right, let's move on to our next question. And this is an email from Mr. K.S. Srinivasan, and he plans to invest 5,000 rupees per month in a diversified fund for 10 to 15 years. And we don't have him on the phone line, but then he wants fund recommendation for the amount of 5,000.
Right. Kavita, as you know, all the conversations that we have, we would really like to know. Investment horizon is definitely given by Mr. Srinivasan, so that's a welcome help. We would also have like to know what kind of investor he is in terms of risk appetite, whether he is an experienced equity investor or first time testing the waters in equity. But let's assume that since he has asked for a 10 to 15 years kind of suggestion, I would suggest he has a slightly aggressive kind of a scheme in his mind. So first and foremost, a 5,000 rupee SIP over 10 years will generate about 11 lakh rupees of corpus for Mr. Srinivasan, and same 5,000 rupees SIP, if he holds on for 15 years and if it generates 12% kind of CAGR, the corpus would be about 24-25 lakh rupees. So that's the sizable corpus. For the aggressive risk profile and given the extremely long-term horizon, I would go with two schemes. In a large or mid-cap fund, you can look at HDFC Large and Mid-Cap Fund. In mid-cap fund, you can certainly look at Motilal Oswal mid-cap fund. These are the two schemes that you can, put into your watch list and probably try to invest in these two.
All right, that's the solution for Mr. K.S. Srinivasan. But a lot of times, Amol, what happens is, like for example, he wanted to invest 5,000 rupees.
Right.
People divide 5,000 into 5 funds. Now, an amount like this needs to be divided into how many funds ideally?
Right. So Kavita, I can certainly say with a lot of confidence that no matter what your portfolio size, if your portfolio size on the aggregate is suppose 2 lakh rupees, or even if it is 20 lakhs or 2 crores, I would suggest a portfolio of not more than 4 to 5 schemes, 4 to 6 schemes. And especially if you're starting out, and you would have noticed that for 5,000, I have recommended hardly 1 or 2 schemes. The basis of all of this is mutual fund itself is a diversified instrument. One mutual fund, we are talking about equity fund. So let's talk about that. One equity mutual fund scheme will typically invest anywhere between 30 stocks all the way to 70, 80, 90 stocks as well. If we assume for a moment that there is a 50% overlap across 3 schemes, you will still get exposure about 150 stocks. That's a decent kind of diversification to have in place, to have in your portfolio. More scheme does not mean more diversification. The instrument itself is diversified by the very nature of it. But to answer your pointed questions, for a 5,000 rupee SIP, I would suggest starting with 1 or even 2 schemes at max is probably the best thing to do. 1,000 into 5 is not going to help. It doesn't help in diversification. It doesn't help in gaining the kind of, if you think that more schemes means more returns, that is also equally untrue. You would simply get the weighted average return of all the 5 schemes that generate a return for you over a period of time that you remain invested.
All right, so we move on to our next viewer's question, Vijay, and he's asking this via an email. And he says that, okay, so he sent his portfolio and his wife's portfolio. There are a couple around 40 and PPFAs, PGI mid cap and Quant small cap. I'm assuming it's a flexi cap fund. Lump sum of 3 lakhs put in ICICI passive multi-asset fund. Also, they have some investment in stocks, that is also via SIP, and they've got sufficient emergency fund, they've got a term cover plan on them, they've got a health cover also, and they want to increase their mutual fund SIP by 10% and stocks SIP by 20,000 every 3 years. Okay, so he wants to understand if he should be increasing debt allocation in his portfolio, good short-term and long-term options for that, and they also want to buy a house. So no, they haven't. They want to buy a house after investing in equity through their current investment maybe, and the target is to achieve 1 crore in the 11th year and 13th year from now, and 20 crore corpus after 20 years. And he also wants to take international microcap exposure in his portfolio. He wants to know about the AMC fees and should he be going into passive for a long-term period, and also if the corpus can be attained by this particular portfolio. Okay, too many questions and I think limited set of details, but then whatever we have, let's begin with the fund selection.
Right. So, Kavita, you're right. This is one of the most comprehensive information and number of questions. Almost it's equivalent of doing the entire financial planning. That would take a lot of time, but let's put our best foot forward and give it a shot. So I would say that you have selected flexi cap scheme, a mid cap scheme, and a small cap scheme. And your investment horizons, Mr. Vijay, are 11 years, 13 years, and 20 years. So I would suggest that just continue with this. Parag Parikh flexi cap, PGM mid cap, quant small cap, all of them are reasonably well schemes, all of them are doing good. And these would anyway be part of the shortlist that we would have suggested you. So scheme selection is fine. Shall we go to the first question, which talks about the debt to equity ratio?
Repeat, Amol?
Yes, Kavita.
I also want to understand, do you really think he should be increasing his debt allocation in the portfolio?
Right. So my opinion, I have analyzed all the numbers that he has given. They also have the employees provident fund contribution, NPS contribution, so on and so forth. So I would suggest your existing equity allocation, equity to debt ratio is 3:2. As in you have 60% of lump sum into equity, 40% is debt. Given your extremely long-term horizon of 11 to 13 years and then 20 years, I would suggest 40% debt is in fact a very good debt allocation. You can probably look at increasing your equity by a little bit, but I would suggest definitely no case for increasing your debt exposure. Also, your monthly SIPs to equity and debt. Debt, I'm using Provident Fund as a proxy and NPS as a proxy. Those are also 2:1 ratio. So 60-65% debt and 35-40% 60-65% equity and 35-40% debt. I would suggest debt allocation is in a comfortable zone. No need to increase it further.
Amol, now he's saying that to invest in equity, he did not plan a real estate investment or a purchase.
Correct.
So we know how important it is to diversify your portfolio, and if at all it's a house that you are going to live in, you can have it.
Sure.
This strategy or this mindset is right?
Kavita, this is exactly the answer that I would have given. First, the pure numbers part. If you do a simple Excel or a calculator discussion on buy versus rent comes out ahead because rental yields in India, most of the cities hover around 2.5 to 3%. And as of now, the interest itself that you'll pay is in excess of probably 9%. So buy versus hold, Excel discussion, buy versus rent comes out ahead. But you're absolutely bang on. In the Indian context, we also suggest our clients, our investors, to have one home, one property where you will actually stay. We do not advise second and third home or to earn the rental income out of it, but one property is definitely something that you can consider.
And what about the AMC fees, and should he be going towards a passive strategy in the long term?
Right. So, Mr. Vijay, there is no need of taking a 1-0 approach or 100-0 approach. You need not shift everything to passive, or at the same time, you need not continue to stay invested in active funds. What I would suggest is there are studies that have said that majority, about 50% or more, 50 to 60% of large cap schemes are unable to beat benchmark on a medium to long-term horizon. So you can shift or switch your large cap exposure, especially the future SIPs, to an index fund where you will save on AMC fees because that is one of your concerns. And as your experience pans out, And if mid caps and small caps continue their outperformance over index, mid cap and small cap allocation can stay in active funds, but large cap component can be switched or can be shifted to index funds over a period of time, especially starting with SIPs.
One last question. Do you think he needs to increase the SIP amount so that all his goals are achieved?
Actually, what Mr. Vijay has given, he has given us an indication that he will be increasing 10% SIPs every 3 years. So I would suggest that hardly comes to a 3% compounded. If his income cash flow allows, then I would suggest at least keep your SIP increase close to inflation, maybe 4 to 5, 4 to 6%, slightly higher than your 3% figure. Or if you are typically, my advice is, if you are a salaried employee or a professional, keep your SIPs or investment rate of increase or SIP top-up rate equivalent to your salary annual increment. So if you get a 8% or a 12% increment, then your SIPs also should go up by equivalent percentage.
Right, so that's the solution for Vijay, but then we move on. We have Raghav Joshi from Ahmedabad online with us. Hi Raghav, good evening. How are you doing?
Good evening, ma'am. How are you?
I'm doing good. Thank you so much for sending us your question. Raghav, we have the details wherein you have Aditya Birla tax relief, HDFC tax saver, Kotak tax saver, you have Quant mid cap and SBI small cap, and you have an LIC policy also. 1 crore in 20 years. All right. So let me just go to Amol directly. Amol?
Yes, Kavita, I think this is a completely, it's a different question. I don't think we have all the details. I have details of amounts, but I would suggest from what I've heard, in tax saver segment, you can, depending on what is your basis of selection of the scheme, I would suggest for tax saver, you actively look at Bandhan Tax Advantage Fund. That's my advice. Going by your, the asset allocation that you have suggested, some amount into PPF, as long as your equity allocation is 60 to 70%, because you are building a 20-year portfolio, I think you should be well on your way to achieve your goals.
How many tax saving funds ideally one should be keeping in the portfolio?
Yes,
Ma'am,
that is correct.
Please go ahead, yeah.
Madam. I want to close my Aditya Birla tax relief 96, and I want to invest that money in other SIP.
Okay.
So please suggest me the particular SIP that should I invest in.
All right. Amol.
Yes, Kavita, I have already suggested name of the scheme. Mr. Joshi, I would suggest if you want to close or stop your existing scheme, Birla Sun Life Tax Relief 95, you can stop that. And the next scheme, fresh scheme that I'm suggesting to you is Bandhan Tax Advantage Fund. Your 20 years goal, if you have a 5,000 rupee SIP, and if it generates 12% CAGR for you over next 20 years, then your 5,000 SIP will actually accumulate a corpus of about 45 to 46 rupees. So if you have a goal of 1 crore rupees, then probably you'll have to increase your SIP from instead of 5,000 to about 10 or 11,000 per month for next 20 years.
Thank you so much, Raghav, for sending us your question, and thank you so much, Amol, for being on the show and helping our viewers with their financial portfolio queries. On that note, time to sign off, but I'm going to leave you with our WhatsApp number and email ID where you can send us your portfolio-related queries. Thank you so much for watching. Goodbye.